The Philippine financial markets are navigating one of their most turbulent periods in recent history. In a surprising revelation, President Marcos himself publicized the systemic plundering of the national budget.
Kaya sa mga nakikipagsabwatan upang kunin ang pondo ng bayan at nakawin ang kinabukasan ng ating mga mamamayan, mahiya naman kayo sa inyong kapwa Pilipino.
An inquiry later showed that corruption is embedded in governance structures, from procurement processes to budget allocations, and reinforced by political dynasties and patronage networks.
Top 3 friends in Congress.
Well, first like every day kasama ko si speaker, every day nag-focus group discussion kami, si DS JJ Suarez, Congressman Suarez, si Don Gonzales, Senior Deputy Speaker. Lagi yun namin pinaplano every day. Nagpa-plan kami what's good for our country, what's good for Congress, what's good for our people.
Corruption in the Philippines is systemic, not episodic. Within the Philippines, scholars and pontiffs argue that corruption operates as a socially embedded structure, exploiting patronage and clan-based politics. To them, corruption is normalized within political and social systems. However, public outrage is boiling over, with mass protests and student walkouts demanding accountability. The Catholic Bishops' Conference and civil society groups have called for criminal prosecutions and recovery of stolen funds. The revelations have shaken investor confidence to its core. PSEi dropped to approximately 6,057, down about 4 to 5% in the past month, breaking below the psychological 6,000 support level. The peso weakened past 58 pesos per US dollar, signaling capital outflows and heightened risk perception. In the midst of this storm, the Bangko Sentral ng Pilipinas, BSP, stepped in with a 25 basis point rate cut, lowering its policy rate to 4.75%, the fourth cut this year. The move aims to revive domestic demand and cushion the economy against external headwinds. But can monetary easing offset the damage caused by systemic corruption? Analysts say not entirely. While lower rates may boost liquidity and encourage borrowing, they cannot repair the trust deficit created by governance failures. Foreign investors remain wary, pricing in higher political risk and pulling capital out of equities and bonds. Foreign investors have been unloading Philippine equities, contributing to the PSEi's longest losing streak since late 2024. Credit rating agencies have signaled that prolonged unrest could threaten the Philippines' investment-grade status, raising borrowing costs. The outlook? Volatility ahead. Technical charts point to a possible slide toward 5,500 levels if reforms stall, though bargain hunters may find value in consumer and banking sectors. The BSP's rate cut is a lifeline, but not a cure. Until systemic corruption is addressed, the Philippine market will remain in the shadow of uncertainty. Hold gold to hedge.